Hey everyone, NIO is scheduled to report first quarter 2024 earnings results on June 6th before the markets open. So investors are curious if they should buy NIO stock before the company announces those earnings results. I'll answer that question in this video, as well as provide a preview of what I'm looking for from NIO when it announces its quarterly results. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the big things I'll be looking out for from NIO in its next quarterly update is a continued increase in its vehicle margin. In its latest quarterly update, it told investors that its vehicle margin increased to 11.9%, which was up from 11% of the previous quarter, and it was up from 6.8% in the previous year. I would like to see NIO continue increasing this vehicle margin. Management has told investors they could get this number up to the mid double digits, so closer to 15%. I would like to see them make progress towards that front. I would also like to see NIO narrow its losses on the bottom line. For the full year in 2023, the company generated $6.9 billion in vehicle sales, and the loss from operations came in at $3.2 billion. So it generated nearly $7 billion in sales in US dollars, and then its loss from operation was $3.2 billion. So it's losing significant sums of money on the bottom line. I would like to see them reduce those losses on the bottom line. Now, we've got a pretty good idea of what NIO is going to report in terms of delivery numbers because NIO typically gives investors a monthly update on their delivery numbers, and they've already given us January and February numbers for 2024. NIO delivered 10,000 vehicles in January of 2024 and 8,100 vehicles in February of 2024. Now, in the latest monthly release, NIO said that it delivered 15,620 vehicles in April of 2024, and that was up by 134% year over year. However, the results from April will not be included in the next quarterly release. NIO's first quarter is January, February, March, and so April is going to be in the next quarter. Still, the company on April 25th launched its 2024 ET7, a premium smart electric executive sedan. And in fact, NIO has launched several models over the recent months, and I want to hear about management on how sales of those models are progressing, specifically the new ET7. I want to hear management discuss sales so far for these models, how they're progressing, and from the early signs, it looks like consumer demand for these are strong. Consumer adoption of these vehicles are strong. Now, NIO has that swapping battery technology, which I think offers buyers extra level of convenience because switching charging batteries is so inconvenient, and if you can reduce the time to charge, that's a big deal. And I think investors are looking for a company that can solve this electric vehicle situation to increase adoption. Now, in the US, EV sales are not growing as well as they are in China. So NIO's operating in a better market for EV sales in China and then looking for other markets as well. And outside of the US, these markets are doing much better. But in the US, EV sales are not progressing as well. The trouble with the Chinese market for EVs is the absolutely soaring competition. Several new companies coming out, several new models coming out, and consumers have excellent choices available to them. And so companies like NIO really have to compete to gain consumer attention. Longer term, I want to see NIO return to improving its operating profit margin. You could see its operating margin here over a trailing 12-month period. NIO had been doing a good job improving this, going from negative 175% closer to negative 20%, but then it turned things backwards and now it's back going the opposite direction. Negative 41% operating profit margin in the most recent trailing 12-month period. I'd like to see them make progress towards profitability. Understandably, many newer companies are not profitable when they start out, but I like to see them make progress towards profit, which NIO was doing, and then it reversed course because of the slowdown in EV sales, in growth rates in EV sales. I'd like to see them return to growth in this metric. Now, NIO's stock price has reflected the difficulties in the EV industry. The stock experienced a frenzy in 2020, as did many EV stocks. NIO wasn't the only EV stock to soar in 2020, going from around $3 a share up to over $60 a share. Now, this whole way up, I told investors to avoid NIO stock, that the increase in stock price was not justified, that investors were getting ahead of themselves with this company, to be cautious because it hasn't delivered the kind of tangible results that justify a stock price increase of that magnitude. And hopefully some of you that were watching took that advice and did not jump in to NIO stock at those record high valuations, or anywhere at higher valuations. Now, another thing I'm looking for from NIO is news on its acquisition. Remember, NIO used to outsource its manufacturing, and then it purchased its manufacturer that it was outsourcing to. I want to see how they're digesting that acquisition. I want to see how that acquisition will impact NIO's profit margins going forward. Is it helping lower costs of production? Is it helping increase manufacturing capacity? How is that helping? And is it going better than management expected when they made the decision to buy that company? Or is it going worse than expected? That's another big thing I want to hear about. Also, NIO launched the lower price brand. I want to hear more about how that's going from management. Although I'm not as interested in that as I am in how the manufacturing purchase is going, because that has the biggest potential to improve the profitability of the company. If it can lower the cost of goods sold, it can make big progress towards profitability, which is the big concern with me with NIO stock, is how much money the company is losing on the bottom line. And those types of losses do not seem to be getting better, as I showed you with this operating profit margin metric here. They're just kind of flatlined here, and they were actually going in the wrong direction. So this is my major concern with NIO, is can they put this business on sustainable footing? Can they improve these margins? Can they return to improving these operating profit margins so that they can reduce the losses on the bottom line, and then just be a self-sustaining business where investors can just remain patient with the company to grow and increase its profitability? Whereas now it's kind of against a race against time to rush in and achieve growth large enough to generate break even, at least, so that it stops losing all the money. Eventually, it will run out of money, and it will run out of investors willing to give NIO money if it just keeps this cycle going. So NIO right now is trading at a forward price to sales of 0.751. It's the lowest it has traded for according to this metric in some time. It used to trade at a forward price to sales over 9, but again, I've argued several times it should have never been trading at those valuations to begin with. This was the frenzy of 2020 and 2021. Here at 0.751, I actually still don't think the company is a good value. I last updated NIO, told investors don't buy it. I last told investors that on April 1st. I'll reiterate that recommendation today and say NIO stock is still not a buy. I would not buy it ahead of earnings. I would wait to see the company's results. And if I see good progress on its profitability, on those key metrics and those key strategic investments the company made, I'll be sure to update you on this recommendation. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.